Good morning, traders. It's 8:02 a.m. Chicago time on Wednesday, the 19th of October, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is allocating to risk again this morning. The overnight session is pushing near highs after balancing most of the session with a clean test down. We'll go over that in a minute. Morgan Stanley reported this morning at 6 a.m. beating expectations. And we're looking for, let's see, housing starts came out weaker than expected, and we're looking today for the rest of the day, we're looking for the Bank of Canada rate decision at 10 Eastern. Then we're looking for crude oil inventories, distillate and gasoline inventories, all at 10:30 Eastern. We have BOE Speaker Haldane at 1 Eastern. We have Fed Speaker Kaplan at 1:30, and then we have the Beige Book at 2 Eastern. That's what's on deck for today, so keep an eye out for that. Other than that, let's move right into what we talked about yesterday. Yesterday, the primary idea was for the market to open in a sideways pattern on a gap up. The market has actually made an interesting pattern. If we continue higher, then sellers will likely be put at risk here. But overall, we open in a gap, and the expectation is for a push down into the 3250, and then ultimately regaining the prior day's range. And then the extended the key target below is around 2126, which is value high somewhere around there, 2550, 26. That's what we're looking for as the primary idea for the day to execute against. By the way, those of you who did not attend or did not see the notice, I did part 4 of the educational series for Futures IO, and it covers execution, and it ties in how these trader bites ultimately lead to trades. Set up the trades or create the plan for the trades. Once that recording's out, I will post it. The secondary hypothesis, looking for the market to stay in a gap, keep a gap zone open, and start moving again towards 44.50. This was really the plan for Friday. Last Friday, as you see, we're basically, so this is Friday right here, and basically we're opening pretty much, wow, that is really bad. We're opening pretty much in the same spot as last Friday with a gap up again. And last Friday, what we did was we tested higher and we pushed lower. Again, the primary hypothesis was for us to push lower, chop it and push lower. So basically the same plan as Friday for hypo 1, 2, and 3 really. So hypo 3, push higher, fail, and then push down deep into the prior day's range after failing to continue higher once taking the overnight high. Here's what actually happened. Market opens. It's really an open auction. It's got a downward skew, but it's an open auction. We have a clear high, low, pullback, and then we start to make our initial impulsive move, pullback, continuation into the prior day's range. This green here, this green line is the prior day's high, so keep an eye on that. It pokes into the prior day's high by a few ticks, 4 ticks, consolidates, and then walks right out, sets us up for a mid-trade short, and that trade does not work out. It only yields about 2 points before it continues higher. And now with the overnight high, the IB low, IB high still intact, and for the session, the overnight high and the overnight low still intact. The expectation is for pullback to mid, consolidation, and then ultimately to break higher and start tackling that 44.50 again, which has been a tough low volume node, and I'll show you where that comes from to break into. After consolidating for quite some time, the market rolls over and retests the prior day's high right down here, and then finishes somewhere near the VPOC. The expectation on the reopen in the Globex session is for it to continue to climb a little bit and then look for a drop into the prior day's range, into Monday's range. And what it did yesterday was actually to extend upwards initially. So here's yesterday. This is yesterday right here. This is the overnight session, and what it did is instead of um, going higher and then dropping, it actually sat sideways through the overnight session until the China GDP number came out. It popped a little bit, tested higher, then it extended its move down, and now after a clear move down, there's a good taper on this low here. This looks to me like a fairly strong low. It pushes through and is pushing the other side. I believe the way it's set up, it looks like it's done to the downside, at least on the open. So it puts things into perspective in terms of what the auction has done and what prices have been tested. So this morning, well, before I get into that, let's take a look at a bigger picture. Here's the weekly. This is the weekly profile chart. This is last week. A lot of volume here. We're stuck here right now. And what we did earlier in the week on Monday is we tested below, right? We formed all this volume below. Then we gapped up here yesterday, and we traded down into that into the high volume of the prior week, and we held above the low volume node here, and the cutoff point is around 28 even, 21.28 even. So we have a double distribution profile so far on these 2 days with a cutoff at about 20, 28, 29 even, and we're holding these prices up here. Currently, the S&P, as a point of reference, the S&P is trading at 2135.50. It's trading up here where this pink mark is right here. So it's holding this upper distribution. As long as it does not drop below the 29, then shorts are at risk, and it's likely to push through to 44.50, and then eventually, depending on what the ECB does, tomorrow is the big day of the week. The ECB announcement at 6:45 Central, 7:45 Eastern, and the press conference at 8:30 Eastern, and it's likely to cause a revaluation across the board based on what the ECB says. But ultimately, the target is up here at 54. We're looking for this point of control to be retested from below. So that's the layout, the big picture layout, and where we fit on the short term. Where we fit in the short term is we've tested the low of September. We had the low of September. We pushed up. We pulled back. We had a lower low. And what we've done is we've done this sort of number right here. We have a higher low. This low of Monday is really important to watch. Once that low gets taken out, there's a high probability of a quick drop through the 2107.75 and a continuation to 2103, which is the low volume node right here. So I know that's a lot of information to process. One last piece of information, a statistical piece right here. This is the weekly. This is the weekly chart, and the range on the week for the pit session only, RTH only, the range so far has been 2150. The range, the normal range is around 29. So we've had an okay range so far. Yesterday's last week was 55.75 versus 29 is the most common. 53 is the edge of what we consider to be normal, or one standard deviation, or 70%. So last week was a wide-ranging week. This week is likely to be a narrower week, and so far we're having an inside week. What's the range is not so surprising. We've only had 2 days. We've covered 21.5 points, and the mode, or the most common, is 29. The issue here is the volume. If you look at the volume so far in the last 2 days, we've only traded 1.95 million contracts, 1.95 million contracts, and the normal volume for the week is 6.5, or the most common volume is 6.5 million. Last week we traded 7.4 million. Very light on volume this week. I just wanted to point that out. Again, all this is doing is taking every day and creating a statistical histogram of where we stand. Let's get down to business. As far as what's expected for today, we're opening in range, in value, expecting an open auction. On the open, I'm looking for a slight push down, and then I'm looking for a test of yesterday's high at 21.39 and a quarter, and then ultimately I'm looking for a test of 21.4450 on the upside. Again, if I put, let me compress this. If I put a profile on both of these days here, you can see that the cutoff point, the low volume node, is at 28.75, 29. It's actually 29. There's a test of 29 right there. Test of 29 right there. This is a really important area for bulls to hold to start pushing towards 21.4450. And I want to remind everyone, I don't really have a bias. I don't really care if it continues higher or lower. Lower is always easier because it's faster, pays out faster. But I don't want you to think that I have a bias to the long side or something, but this is basically what the market is shaping up to do. Secondary hypothesis is to push higher into the overnight high, make an attempt at 39 quarter, and then find its sellers like it's been doing, push back through to the 21.33 point of control, chop around, and then retest this 21.29. That would be the second hypothesis for the day. Again, we're opening in range, in value, so we are in a balance here. The market has not found too much to price in overnight, and it's likely to be a fairly choppy open. I'll leave you with those thoughts and ideas. And if you have any questions, as always, just post them on Twitter, or hit me up at futurestrader71.com/contact. Good luck and take care.